Okay. All right. We're just gonna go for it. I've spent too much time trying to make these videos today, so we're gonna go for it on this one. Um, this is C-Zar Gets Crypto with your boy C-Zar. My real name is Chris, and I got into crypto back in 2017, the end of 2017, at the end of that hype cycle. I bought my first bitcoins in 2015, actually, and I say bitcoins because I did buy multiple. I spent them. I spent them, and I did not hold any of them. I got back into crypto in 2017. I kind of forgot about crypto. I wasn't really actively involved in it until 2017. Um, and yeah, I'm kind of giving a little rundown of who I am, where I come from, how I got into the space and stuff before we jump into the major technical analysis. I say major because it is going to be extensive. Um, there will be a lot of talking and a lot of referencing. So without any further ados, I don't know, make myself real small. There we go. And I think I'll be okay if I'm right there. Okay. So without any further ado, let's just hop into it. Yeah, I'm pretty sure you can still see me. Um, let's see here. So this is TradingView. This is an app, TradingView. The chart here, if you can see, if I change this to a line, this is what most people are familiar with whenever they look at a price chart, right? This is what everybody's kind of familiar with. Um, but the professional, whatever that means, traders, what the degenerates do is they use candles. This is how you know you're a real degenerate, is whenever you're using candles, right? Um, if you're just a novice, then you're using the lines. But if you're involved at all, it's really not that hard to adapt to the candlesticks, guys. It might look weird at first. It literally might look weird for like a day, but you adapt to it really quickly, I promise. Um, TradingView, we got the Japanese candlesticks on here. It's on the weekly time frame. If you click here, you see it's on the 1 week. That means each candlestick, each bar is 1 week in time. We got 6 days and 20 hours until the next candle closes. That means we just closed our last candle about 4 hours ago. All right. So I want to kind of propose a thought, an idea, a perspective. And that's the whole purpose of this channel, by the way. It's not financial advice. This is not it's like me telling you what to do with your money. This is me telling whoever what I'm doing with my money and what I'm planning accordingly to that. It's my opinion, it's my perspective, and for anyone watching this, maybe it's their entertainment or a different perspective. But it is not advice. This is not something I suggest anybody do. I suggest that you create your own opinions, you form your own ideas, and you act on them. And if your ideas and your opinions happen to line up with mine, cool. If my ideas or opinions happen to affect yours, or maybe give the thought into a different perspective, cool, whatever. But this is not advice. This is not me telling you what to do. I'm not a professional. I'm not an expert. I have lost money in the crypto markets, and I have made it all back and am in the green now. This last cycle, I crushed it, thankfully, but I know it's not like that for everybody, and it wasn't like that for me for a long time. And sometimes it takes time to figure things out, and I feel like I'm figuring things out, and that's kind of why I want to share my perspective now. Like I said, I've been in this for 5 years, but all of a sudden now I'm starting this YouTube channel, so it's not like it's something that I've just started wanting to do yesterday. I've wanted to do this for a long time, but I didn't feel like I had anything to offer. I feel like I was a student, and I still am a student. I'm learning every single day, which is why I'm saying this is not financial advice. I'm not an expert. I'm not a pro. Though I have made a little bit of cash in this market, that does not make me an expert. It does not make me a pro. Maybe it makes me lucky. Maybe it means I know a little bit of what I'm talking about. Maybe it just means that I have developed a strategy that works good for me, but that doesn't mean it's going to work good for you, and that does not mean that I'm talking about things that you should do. I just got to say that because I don't want to be held liable for anybody's shit, be held liable for my shit, right? If I make a suggestion and you make money off it, you make 10x, you're not going to expect to pay me that money, right? just like if you're watching this perspective, you take my advice to heart and you lose all your money, you should not expect me to pay you a goddamn cent. So just keep that in mind. This is not advice. This is an opinion. Okay, let's hop into it. There are a bunch of different ways to do technical analysis. There's a bunch of different ways to do what they call TA. There's all kinds of tools, all kinds of indicators, but let's just break down what TA is first. This is my first video, so why not, you know? TA is that. It's technical analysis. It's the analysis in a technical format, right? Not a fundamental format, right? Fundamental analysis is like this company has 10 trucks and they I don't know, they have to ship out things every single week and they're at max capacity, right? So even though and they've got so much stuff that they want to ship out, but they can't send it all because they only have 10 trucks. And so they have a limited amount of money that they can make because of that fundamental flaw. And then you got another company like Amazon. They got unlimited trucks. They got unlimited access to trucks. If they run out of trucks, they got UPS or FedEx or whatever to run it, you know? They got unlimited trucks. From a fundamental point of view, you know, whether or not the first company I said that had 10 trucks, whether or not they had the same amount of sales as Amazon does, Amazon is clearly the fundamentally better company, right? Because they have more trucks to sell their stuff. That was kind of a bad example, but just to give an idea of what fundamentals are, it's like in the physical world, the real world, where technical analysis, it's still in the real world, but it's more of on the charts. It's actually strictly on the charts is what technical analysis is. So, analysis is. So, as I said, there are many ways to do technical analysis. Just like a diet, there's no one way to do it, but you should find a way that works for you, and if it works for you, stick with it. Be open to changes, be open to new ideas, be open to new studies that can show improvements, of course, but be true to your style and be true to your methods and grow and learn from that, you know. Be open to adopting new methods too, but don't try to do three things at once that don't blend together. It's good to look at all of them. It's good to be aware of all these different diets and the positives and benefits, but you need to find the one that works best for you. For me, what I've found that works best for me is technical analysis that revolves around the Fibonacci sequence, specifically the Fibonacci retracement tool. And I'm doing the Dr. Evil laser fingers a lot. The Fibonacci retracement tool is a tool that measures a range, any given range. I just measured this range here from top to bottom. You can see the circle here to the circle here, top to bottom, right? I'm not measuring it from like over here to over here. We look around, we find the top in this range, which is literally right there, to the bottom. And that's generally how we draw fibs and figure things out. These lines and these numbers, and it doesn't have to be exactly the top or the bottom. You know, I could analyze like this over here and just see how it acted, just to see what it's doing. And you can see, oops, like this one got denied at the 50. We come back down here, this one got denied at the 236. That's generally not a good thing. When you see as the fibs go down, it gets rejected by lower levels. But that's not what I'm here to talk about. The Fibonacci retracement tool is based off the Fibonacci sequence. It's a bunch of ratios that are, I believe they're square roots or the square. I think they're the square roots of numbers in the Fibonacci sequence. And the golden ratio itself, what the Romans and the Greeks used to build their amphitheaters and Parthenons and what aqueducts, all that stuff. The secret to their architectural brilliance was the golden ratio, right? When someone wakes up, they invest $100 in something, they wake up and they have $50 left in their account. They're not going to sell. They're going to feel like shit. They're going to feel bad that they lost all that money. But at that point, they're like, I'm in it to win it. You know, at this point, like whatever, like let it go. Like I'm not going to sell here. Like, you know, it went down that much. Maybe it'll come back a little bit. But if that same person woke up the next day, at least for the majority of the time, if that same person woke up the next day and it was down 61.8% or more, they'd panic sell. They panic sell. It's not just a physical thing that the Greeks and the Romans use. It's psychological. It's It's things that we find in nature, seashells, trees, mountain ranges, um, the distance between spirals in our galaxies, all revolve around these ratios in the Fibonacci sequence. There's no, I mean, there are reasons why, and at the same time there are no reasons why. It's kind of like a phenomenon, um, but it's evident and it's all around us always, and that's why I like the Fibonacci. I find it to be useful for myself. So, a little introduction to that, which is perfect for what we're really going to get into, is the price analysis of Bitcoin using Elliott waves. Elliott wave theory is a it's a way of recognizing patterns, but not like patterns like squares and circles and triangles. It's patterns in movement in relation to the Fibonacci sequence. Normally, that's basically what it is. Same thing as like harmonics, kind of, but harmonics are more of like shapes, where Elliott waves are more like directional, if that makes sense. Um, um, we'll get into harmonics some other time, I'm sure. Harmonics are really cool too. There's more than just harmonics and Elliott waves that use Fibonacci, but for right now, we're going to talk about the Elliott wave theory. I'll give you kind of an idea. I'm going to go to this right here, Elliott wave theory rules. It's ElliottWaveForecast.com. We're going to look at impulse waves. Impulse waves. And you can see here, this is the figure. This is what they are talking about as an impulse wave. Now, it might look confusing, but you've got your wave 1 up from bottom to top, 1. Just look at the red numbers. Ignore all these letters, all these little black letters. Focus on the 1, 2, 3, 4, 5. You can tell one wave up, the second wave is down. The third wave is up, the fourth wave is down. The fifth wave is up, right? I think Bitcoin is going through this exact pattern, this exact formation. It's not even a pattern. I mean, it's a pattern, but it's a formation. This formation, though, I think that Bitcoin is forming is to the downside. I think we're getting a 1, a 2, a 3, a 4, and a 5, potentially. It could potentially look like something like this. Now, as I was saying, Elliott wave theory is based around the Fibonacci sequence. It's not how we project these waves, it's how we project the fifth wave. This is all about projecting the fifth wave. We need these waves to be confirmed by the Fibonacci and by other metrics too, to assume that we will in fact reach a fifth wave. Battery saver mode for 35 minutes. So I'm going to try to make this quick. I can't reach my charger. It's too small. I can't reach my charger out here. I gotta plan better. Anywho, if we go to Elliott wave forecast, we'll see what the guidelines are. Impulse waves are subdivided into 5 waves, which we just saw, right? Wave 1, wave 3, and wave 5 subdivision are impulses. Waves, it doesn't say, are impulse. It's impulse. So what they mean by impulse, if you look at wave 1, it's an impulse down. It's kind of more dramatic. Wave 3, it's kind of more dramatic. It's a straight line down. Waves 2 and waves 4, it's not necessarily a straight line up or a straight line down. It's kind of like sideways with the intention of going up. It goes against the trend. These are consolidation phases where the price basically, it essentially moves sideways with a slight counter trend in mind, but it can just move sideways too, but it generally does move up a little bit, or if we were going up, it would move down a little bit, whatever. So wave 2, if we're looking at this, at the guidelines for what this website says, I've learned about just a little bit about Elliott waves. I'm not an expert, right? A little bit. And there's other ways to define this. This isn't the end all be all. It's not precise, but it's a good way to kind of check yourself. So wave 2 can't retrace more than the beginning of wave 1. Well, if we look at it from wave 1 here, wave 2 comes up here. If it was to retrace more than wave 1, it would have to come all the way up here. It did not, so boom, it meets that guideline. If we go to the Fibonacci, wave 2 is 50%, 61.8, blah, 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 of wave 1. How do we measure that? Well, we use our tool. So wave 1 from top to bottom is right at 50%. 50%. Literally, the 0.5 right there, this green line, it tips that. It tips that near perfectly. And if you see on wave 2, that's the first requirement. It has to be at least 50% or any of these other numbers of wave 1. So we have that. Wave 2 is cool. Wave 3 cannot be the shortest wave of the three impulse waves. The three impulse waves, again, being 1, 3, and 5, right? The ones that move more dramatically. So wave 3 cannot be the smallest wave. This is what I mean by this isn't precise, because I've heard that wave 3 can't be the smallest wave before, but that doesn't mean that it can't be the smallest of 1, 3, and 5. I've heard that it can be the smallest of 1, 3, and 5, though it's not common, but it cannot be smaller than wave 2. And what I've known about Elliott waves personally, not based off this site, is that it cannot be smaller than wave 2, and it cannot be the smallest wave. It's, either of those. If wave 3 is either of those things, then you're using the improper count. You're looking at it wrong. That's how you know you're wrong, basically. So wave 3 cannot be the shortest impulse wave. If we look at it, wave 3 here is definitely not the shortest. It's bigger than wave 1, so cool, we got that. Wave 3 is 161.8, 200%, 261.8, blah, 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 of wave 1 and 2. If we were to measure that from the end of wave 1 to the end of wave 2, which is really just wave 2 in itself, this extension, you see this number down here, it says 2618. I'm going to try to, let's get closer. I don't know why I'm so far out. I'm sorry. Let's see, we'll get a little closer. 261.8%. We tipped that line damn near perfect too. So wave 3 meets the criteria that we're looking for. Wave 4 does not overlap with the price territory of wave 1. Well, we go back. Wave 4 here, and I'm going to delete this fib. Wave 4 here, for it to overlap wave 1, because wave 1's over here, it would have to come at least up to here, 33,000. It, in fact, did not. So cool, it meets that criteria. Wave 4 is 14%, 22.6, 38.2, 3, blah, 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 no more than 50%. And it's saying all these numbers. And again, from what I've learned, the little I've learned, it's not precise, but even this website saying, but no more than 50%. It's giving you all these numbers, but then it says at the end in bold, but no more than 50%. This means it does not, in my opinion, not just from this website, but from what I've learned, it doesn't have to exactly be a 236, a 382, a 14.6. It doesn't have to exactly be any of those numbers. It just can't be bigger than 50% of a retrace. It has to be a small retracement. It has to be a weak retracement, right? That's wave 4. Wave 4 has to be a weak retracement of wave 3. So let's measure wave 3 from the top to the bottom. Wave 3. Here's wave 4, right? And it comes up. It is actually just below the 382. Just below. Really close to it, but just below. That meets the criteria too. So waves, we just went through it. Waves 1, waves 2, wave 3, and wave 4 have all met the criteria that from the things that I've learned and from this website, from what its guidelines are as well, meets all that criteria. And in my opinion, this is very suggestive, very indicative that we have a very good likelihood of achieving or of creating a wave 5. And that wave 5, in an Elliott wave theory, waves 3 and wave 5 tend to be the biggest waves. Tend to. It doesn't mean that it's going to be. They just tend to be. Wave 3 already looks really big. If wave 5 was to be bigger than wave 3, I would be surprised. It can happen, but I would be surprised personally. Let's look at the requirements for wave 5. Wave 5 needs to end with momentum divergence. Okay, so let's bust out our momentum indicators. This is my RSI. We're going to get rid of the RSI, or you know what, we'll keep the RSI. Go to the MACD. Dun, da, da, da. Where are my favorites? There we go. MACD. I'm not going to adjust the parameters. We're just going to use the standard MACD. I'm going to zoom in on it for a quick second. So you can see here, you've got this red, oops, right there, right? And you've got this red here. You've got this red here. it's creating a series of, from this low point to those low points, it's creating a nice straight line of higher lows, right? You're getting higher lows in this, which is great. All the meantime, price is creating lower lows. And actually, from this one to this one, we did have a higher low, but from this one to this one, we got a lower low. Well, here we have a higher low. That's what you call bullish divergence. To create a third leg of bullish divergence, price would have to close on a weekly scale in 6 days, 20 hours, or it could be any week. It doesn't have to be this week, but some week would have to close, and some week probably relatively soon, not like 10 years in the future, you know, probably within like the next few months, if not this month, maybe by the end of September. We would have to see the price go below $19,241. Not just go below, but close below. If the price went below there, we would get the histogram here building in the red. We would have lower lows by closing price action, but we would have higher lows in the MACD. We would have higher lows. We would have higher lows versus lower lows. We would have a bullish divergence in price momentum, right? In the momentum of price. So that fits the aspect of wave 5. The only way that couldn't happen, in my opinion, is if Bitcoin dropped. It'd have to drop below like 11K really quick. We could do the math to like verify all that, but just trust me. You know what little experience I've had, 5 years of experience. It would have to drop that hard really fast and close down there for us to. I mean, it'd probably even have to actually go below like 10,000 for it to build more negative momentum than what's been built on the prior downside cycle. Because like this one. Anyways, we're not going to do all the math. I don't have much time as far as battery life goes on this computer. So wave 5 needs to end on momentum divergence. I was just talking about a scenario where that is completely feasible. That's completely possible, and in my opinion, it's even likely. We'd have to go really low to break this potential divergence trend. And I don't personally see that happening. It can happen, anything can happen. But for now, it looks like we're in the right environment for Bitcoin to form bullish momentum divergence. Look at the guidelines. There are 3 different ways to measure wave 5. First, it's the inverse 1, 2, blah, blah, blah of wave 4. So we take wave 4. We take our little wave 4. Because remember, that's wave 4 right there. Wave 1, wave 2, wave 3, wave 4. Maybe I'll draw that again. Just for anyone who might be confused. Wave 1, wave 2, wave 3, wave 4. Potentially wave 5. Actually, wave 5, the first way to measure it, potentially, it's the 123.6 or the 1618. I'm pretty sure it's not 123. Maybe it is 123. I don't know. I've always used the 1272, but whatever. You know, 123 is just a little bit above that. The 1272 is just a little below that. So it's in the general same area. Wave 5 would have to come down to at least here, or at the most here for the first target, right? So let's just put lines in there. Horizontal raise. I'm down with the raise. That's the first area, and that's the second area. And this, if we go back to the guidelines, it kind of acts as a zone. It's between these two numbers, right? It's between these two numbers, these two numbers right here. 15,900 and 13,900. It's between those two numbers. Maybe not even 13. Actually, technically, it's 14,076 is the low, and 15,900 for the high. So somewhere in that range. That's the first target, potential target. I personally think this is where we're going to go. I don't think we're going to go lower than this. I would be surprised if Bitcoin went below 14K. I'd be really surprised if we went below 10K, but we're going to get there, at least as far as like the guidelines go. The second way to move it, or trace it, measure it, wave 5 is equal to wave 1. Okay, so wave 5 is equal to wave 1. So let's just see about that. Oops, I don't want to delete that. I'm going to delete this fib because we don't need this fib anymore. We got the lines here to measure the zone, whatever. Wave 5 is equal to wave 1. I'm going to draw a trend line from top to bottom, right? I'm going to take away the extensions. And I'm going to move this line from wave 4 there down. So if wave 5 was to go this low, the potential target would be around $12,400. If price got this low, we would still have bullish momentum forming if that was the low and it went up above there, from that point. I don't think we're going to go that low. There are a lot of people calling for prices that low, and that's mainly the reason why I don't think we're going to go that low. Anytime you see a lot of people calling for a specific price, things get front-runned or front-ran. Big money scoops things up in anticipation of these targets that everyone has sights on, and basically price just never reaches there because people buy it all up before it ever gets there. I'm kind of expecting that, but that doesn't mean that it's going to happen. In fact, I think I drew that a little high, so I'm going to move it down a little bit. There we go. 12,100, a few $100 off, whatever. So I'm going to change the color. Remember, the first one was kind of a zone, so I'm going to leave these two green because it's kind of a zone. The second one is equal to wave 1, which we took from the top of wave 4 down for wave 5, puts us there. The second one will make yellow. The third target is wave 5 is 61.8% of waves 1 to 3. So from top to bottom, waves 1 to 3, if we were to measure 61.8% of that, let's see, there we go, all the way, nobody can stop me, I'm all the way up. No, that's not what I wanted to do. Okay, let's see. Redraw all this. I don't know why I did that, but let's see. Maybe I should have to go quicker. Oh, this mouse pad is shitty. Okay, here we go. Third time's the charm. Wow. 61.8% of waves 1 to 3. Okay, maybe I'll just draw a trend line because that seemed to work earlier. My mouse is just messing up. So from here to here, there we go. We got our line. From wave 4, the top of wave 4 there, all the way to the bottom. And these lines are drawn like this. I'm not saying that the price is going to drop that fast. It could come out like wave 5 could achieve the $12,000 price out here. It could achieve it right here. It could achieve it right here. It could achieve it even before. That's possible. It could achieve it this week. If it did, it would look like this. That'd be dramatic, but it could do that. Price can do anything. But that's not what we're talking about. Okay, so wave 5 is equal to blah, blah, blah. 61.8%. That's this line here. This is the final measurement. And if we were to draw a ray, horizontal ray, right here, we'll change the color on that one too to just show some differentiation. We'll make it red because we don't want to go that low. That's around $10,800, roughly. Those last two targets, they were like rough estimations. I didn't pinpoint it exactly to the top, but give or take a few $100, we're in the right realm. Around $11,000, around $12,000, and then in between $14,000 and $16,000 are the three targets that this Elliott wave forecast, as the website says, calls for. And that's what I'm calling for too, personally. I think that we are in a textbook impulse Elliott wave. We are in a textbook impulse wave right now to the downside, unfortunately. But fortunately enough, we have these indicators to identify it so that we know that the fifth wave is indeed coming. This could be wrong. I could be disproven. The price can go up whenever it wants to. It could happen right now and just blow this all up out of proportion. What would invalidate this? What would make me change my mind? Well, wave 4, as we saw before, does not overlap with the price of wave 1, and it cannot be more than 50% of a retracement of wave 3. So if we took from the top here, we go to wave 3, basically, price cannot go above 28,900. If price goes above, let's just say 29,000, if price goes above $29,000, then this whole scheme is invalidated. What I've projected so far, it was close for the time of recording it. It was close, but it ultimately was proven wrong. If we break 29,000, but if we don't, and in fact, if we hold this level that we just hit, which was at like what 25,200, if we hold that level as the relative high, then the lower high, then this is valid, and this is the next potential target that we're going to see. And I say potential because none of this is guaranteed. This is all predictions, not guarantees. It's not prophecy. It is an assumption. It's a very sophisticated assumption using math and historical trends or historical patterns or data or whatever you want to call it. Let's see. So that's kind of it, man. That's kind of my overall assumption. I really do believe Bitcoin will go below $16,000. Whenever I see that, that's whenever I'm going to go in. That's whenever I'm going to buy. I'm actually not going to buy Bitcoin. I'm going to buy Dogecoin, but that's for another video. That's for another time. But I'll be buying Dogecoin. I'll be looking to buy most of my crypto assets whenever Bitcoin is below $16,000. And I'll probably scoop up some Bitcoin too. Am I going to wait for it to go to $14,000? Probably not. Could it go to $14,000 while I'm buying it? Yeah, I would be okay with that. I would be totally okay with that. Because if we look in the history of Bitcoin, anytime, and this is the weekly scale, remember, here's its low. The next week it pumped 23%. Here's its low. That same week it pumped from 4,000 all the way back up to 5,000. The next week it pumped 9%. And then, following weeks, like, you go to any of its lows, like here, its actual low, even its semi-low here, the next week was 20%. This week here, it stalled out for a month, but then it went up. Am I okay with Bitcoin going down lower if I buy it at $14,000 or at below $16,000? Yeah, I'm okay with it going lower. It could go lower. I won't be scared, and I don't think anybody who buys at that level will be scared either. I think any lower prices just means people are going to not leverage, that they're going to go in harder. That's my opinion. It's my opinion. So we've got our 3 potential targets. I know there's 4 lines here, but remember, the greens is the zone, the yellow is more of a area, and the red is more of an area, right? A more exact area, exact areas. So this is one reason. I mean, it's a bunch of reasons all in one, but this Elliott wave formation, this 5-wave impulse formation, is one reason why I think Bitcoin's going to go lower. I've got other reasons too. And I'll just kind of, while we're on the price, I'll just keep this up. We can see that this purple line here, it's the 123 MA. I find significance in it. If you do or don't, whatever, it's okay. But I find significance in it, and this analysis finds significance in it. So we're going to go back throughout the history of all this and just see. Anytime, I'm going to zoom out actually. Anytime Bitcoin's been below this purple line, has been and I'm going to delete, I don't know. I'm going to leave that up, but I'll delete the wave and delete that. There we go. Anytime Bitcoin's been below this purple line, it's been a bottoming point, bottom of the 2014-2015 cycle, a bear market low. The 2018 to 2019 low was under the purple line. The COVID crash was under the purple line. Even this insignificant little dump, whatever, in 2019, below the purple line. If you bought below the purple line and you held until it was above the purple line, you're gonna make gains. It's not that hard, right? At least it doesn't seem like it. Very emotional times when you're below this purple line, so it is a lot harder than it sounds. But here we are again below the purple line, and it looks kind of like we'd be in an area where we would buy. And I bet if you bought here at 21,000 and you wait 10 years, you're not going to be kicking yourself in the butt, and your grandkids are going to thank you. Your spouse or your family, whoever, your friends, like they're all going to think that you were smart just for buying at this level here. You're buying at a great level, even at 21,000. But I do think we're going to go lower, right? I do think we're going to go lower. And the reason why I bring up this purple line is because anytime we've seen it in history, We kind of had support here, bounced off it, came down, found it as resistance. Okay, found it as resistance here. The difference is here we bounced right off it. Here we kind of hugged it. We hugged it, we hugged it, we hugged it, and then boom, that was the next rally. Here we hugged it and boom, we rallied. We hugged it and boom, we rallied. We hugged it and boom, we rallied. Here we hugged it and we did not rally for the first time. We actually hugged it. We didn't even find support off it. We just broke through it, found resistance on it, hugged it, and we went lower. That's a first, okay? That's a first. Another first for Bitcoin is right here. Its prior all-time high in 2017 was at about $19,800, and prices this cycle did go below that. They even closed below that. Bitcoin in its whole history has never gone below, even as a wick, let alone closing, has never gone below a prior cycle's high. Never done that. That's never happened before. That's two bad things. Let's just be very objective here. That's two not good things that Bitcoin has done that's never been done before in its entire 12-year, 13-year existence, almost 14-year existence actually. It's not good, in my opinion. It doesn't spell good things when you see stuff like that. When you see it breaking tendencies, that means maybe something new is going to happen, right? If before hugging the line was a good thing, and now hugging the line is a bad thing, you know, I don't know. To me, that doesn't bode well for crypto or for Bitcoin, at least in the coming weeks or months. If we go to I'm going to delete the MACD now. We don't need it. It served its purpose. It proved its point. If we go to this RSI, this is the 123 RSI as well. I know a lot of people don't use long-term RSIs like this. They don't find use in it. I do. I definitely do. And we'll go over why. 123. That means it takes 123 weeks to form this purple line, to form this line here. It takes 123 weeks to do it. So if we go all the way back to the beginning, there's no data here. There's no purple line. It stops, right? Because there's not 123 weeks yet. So since this average has existed, since this 123 week line has existed in all of Bitcoin's history, whenever it bottoms, it's below the purple line, and this line holds the 50. You can see it holds the 50 very, very nicely, very beautifully. If we want to zoom in, you can, I can just zoom in, and it does break it a little bit, but what? It goes to like at the lowest 49.71. Here 49.9. Like it holds that 50 line very beautifully. And that's the bottoming area, right? You come to the next one, and sure, it went a little lower, but again, 49.51. It's holding this 50 zone. It breaks back above it. It's definitely not finding it as resistance. It breaks it, and boom, below the purple line, we're in the bottom. COVID crash literally tipped the 50. Literally tipped this 50 on the RSI, and then went up. We formed new all-time highs from there. Okay, you can see this 50 is very significant. And again, another first for Bitcoin. Not only have we broken this, we did break it before, but not for long. We held it. We came back up, right? We bounced around it. For the first time ever, we've held this 50 as resistance. We hit it. We broke below it. The lowest that it's ever actually gone. It went below to 48.98, which on a long-term RSI like this, one variation like that is a lot more significant than like a smaller term RSI. And the fact, you can just see it between all these lows. It is significantly lower. And what's most significant to me, if last time we bounced off the top of this 50 and it was good, what does bouncing off of the bottom of this 50 mean? What is coming up and finding it as resistance mean? Paired with breaking previous all-time highs, paired with this potential Elliott wave formation, paired with finding resistance on this 123 moving average that we have found significant support on throughout Bitcoin's entire history, that this 123 has existed. This is the first time for a lot of things, and they're all not good things. Now again, I know I'm being pessimistic, but I want to remind you, I don't think Bitcoin's going to go super low. I don't think it's going to go below 12K. I honestly don't think it's going to go below 14K. I think this little green zone is where it's at. I think it's going to be the sweet spot. I do think we're going to go lower, and I think that we're going to be we're going to be near the lows for a long time. We might come down to 14K and then bounce back up to 15, 16K, and then move sideways for a month to 3 months. And the reason why I say we might move sideways for a month to 3 months is because, well, if we look at Bitcoin's history, we go back to any of the bottoming cycles. Let's get it to where it's actually on the bottom, not just in the range, but actually bottomed right there, actually bottomed. And it bottomed here, but I'm just going to delete that. It bottomed here, and then it came up, but it didn't break this range, right? It didn't break this range until over here. So we're going to remember that from the bottom to when it breaks out of the range again. From the bottom to when it breaks out of the range. Well, that was 16 bars. On the weekly time frame, that's 112 days. That's about a third of a year. It took a third of a year at this range. A third of a year. That's 4 months, right? Down here on this one, we got the low, and yes, it came up, but you can see we really didn't break out of the range until, let's say, like this one here, April 27th. You can kind of see from the low to the time that we broke out of the range, about 42 days. It's about a month, right? It's a significant difference, but still about a month, month and a half, month and a week, whatever. So we went from a third of a year to a month and a week, kind of a range, right? We go down here for this low, and this isn't the low, but it double bottomed. It did go a little lower than this, but you can see here, I mean, that's like the top, so the range didn't break really until here. That's 287 days, right? That's like 2/3 of a year. It's a little over 2/3 of a year. It's a very long time. If we want to go from the absolute low, we can say, and I kind of think that's what's going to happen. I think we're going to be in a low range like this for a while. I don't think we're going to get a double bottom like this. But anyways, from the low to whenever it breaks out of this range here, which would be like basically right here, it's 70 days. That's still 2 months. Whether you want to say 2/3 of a year or 2 months, it's still a significant amount of time that it chills there for. Let's see here. Even on this in between, it chills there for a little bit. On this market low, it chilled here, and it did go up immediately after, but really, like, it's in this kind of lower price range. It doesn't really break out of this price range for about a month. Though it did kind of have a nice rally. This is kind of like the exception. And then down here, of course, this bottom we took off. I mean, that's back when Bitcoin went all the way down to 1 cent. If someone bought it at 1 cent, I want to meet that person. But I don't know if anyone actually bought Bitcoin for 1 cent ever. I could be wrong. But anyways, I just wanted to show how much time it takes to consolidate, how much time it takes when you find a low point to actually turn that momentum around and make it bullish, turn it into something good. It takes time. It takes a lot of time. At a minimum, it's going to take at least a month. At a maximum, 2/3 of a year, 280 days. That's what we've seen in the past. If this was the low, well, like right now, we're already at like 70 days. That's not bad. We could break out, right? We're at that time. But I don't think we're at the low. I think we're going to find the low, potentially, in my opinion. I think we're going to find it in November. And the reason I think that we're going to find it in November is because Bitcoin likes to rally at the end of the year. It likes to rally in December and the beginning of the year sometimes. It likes to do that. And if you're going to rally, you got to have downside. You know what I mean? All these rallies, they come right after big dumps. That's just how it is. And the big dumps, they might happen fast, but they chill for a second. They chill for a little bit. So if this big dump takes us down to, let's just say at the least worst scenario, let's say it takes us to 16K, about 16K. And let's say that happened in November, right? Because that's kind of what I'm calling for, is November. We'll just go to October, actually, October 31st. If we're here at 16K and we took, let's say we did a month, that'd be December. December is when we'd start to see a rally, potentially, right? At a minimum. At a maximum, from what we've seen historically, 280 days, right? is August of next year. I don't think that's going to happen. I've got reasons why I don't think that's going to happen. I don't think it's going to be that long. But I do think it could be somewhere around like 180 days, maybe 130 days, something like that. We could see a very long kind of consolidatory phase down here. Um, anyways, I feel like I'm rambling. I feel like I'm beating a dead horse at this point. Um, that's my prediction. That's my analysis. Those are my reasons why I think Bitcoin is going to go low, because it's doing things that it's never done before in its history. And again, they're not good things. There's not a lot of volume down here. You want to see another thing, right? And this is, by the way, this is the Bitcoin index. You type in BTC USD, you find index right there, click it, you're on the index. This is the all-time, this is the longest amount of trading history that we have for Bitcoin on a chart, at least that's updated live. You look at the bottoms, right? You see this volume that came in here, right? You see how high that is? Yeah, it's that. It's as high as this one over here. But look at the volume that came in afterwards too, right? Like look at all that volume, right? Well, we had one little spike here, but then no follow-up. There was no follow-up at all. Um, like at all. We get to this bottom here and there's no follow-up, but we turn up, but again there's even less volume up here. That's bad. That's kind of what like spelled this whole bad thing. We get to this volume over here, this volume over here. They're a lot bigger is what I'm trying to say than what we're going through right now. We go over here, I don't know, just the significant spikes in volume that kind of maintain is what we're looking for. It doesn't necessarily have to be like that, although that is kind of what we've seen at every major low. It doesn't have to be like that. We could get a low with low volume and still turn up. That's entirely possible. But I am looking for more volume to come in at the low points. I am looking for us to go lower, at least to the 16,000 and 14,000 level, because that matches this Elliott wave formation that we're seeing. And that's kind of the main thing I wanted to just bring up, because I don't see anybody else talking about it on YouTube. And I will happily be the only person to call a impulse wave, which is very easy to identify. I would happily be the only person who has no followers at all to call something so simple and so precise too. And again, this, when I say precise, I'm not talking about like I'm calling the exact bottom. I'm just saying it's precise in its measurements. It's precise in the guidelines. It's precise in all the things that we need to match it up. It meets this to a very precise level. It's textbook. It's a textbook impulse wave, which in my opinion means we're going to get a textbook wave 5. And that's 3 potential targets. I think everybody right now is calling for prices to go below 13,000. Some people are even calling for prices to go below 10,000, which is why I think we're never going to get anywhere near there. I think if we went near 14,000, I'd be surprised, but below 16,000 for sure. If we went just below 16,000, that would be enough to psych people out. We get rid of the old low right here. It's going to make a lot of people think that we're going to go even lower. They're going to do things like this, right? You're going to see things like this, bear flag. They're going to, oops, wrong thing. People are going to start measuring it like this. You're probably going to see this in the next month or so. People are going to take, that's not the right way to do it. People are going to measure the top to the bottom here. They're going to tell you that this is the pole, and then they're going to tell you that this is the flag. You're going to see it. I'm telling you right now. I've seen it so many times already. And then they're going to tell you that the way to measure it would be to take that, boom, and that puts us below $10,000. And you're going to, and I mean, it kind of makes sense, right? There's a lot of support at this level. You can see all across here, we've got support at this level. You go back even farther, we've got support and resistance at this level. There's resistance right there, there's support right there, there's support right there. But I don't think this is going to happen. I think this is going to be a false kind of indicator. A lot of people are going to look for this to happen, and nobody's paying attention to the Elliott wave forecasts that are being projected right now, because I don't know, we're a bunch of fish, we're a bunch of cattle. We like to be told the ideas instead of forming them ourselves. Anywho, like I said, I think I've beaten a dead horse with this one. This is a very long first video. I hope it's somewhat educational or informative. I hope it offers a good perspective. I don't have much time left, so I'm going to end it there. I think I got everything I needed to say out anyway, so be prepared. Be prepared. I definitely believe the market's going to drop. We look at this weekly close. Here's another thing. This weekly close is god awful. It's the worst weekly close we've had in over a month. It's an 11% drop for Bitcoin. That's bad. Not only that, but it closed here. That's the lowest close we've had in 1, 2, 3, 4, including this week. It's the lowest close we've had in 5 weeks, over a month. Right after this rally where everyone's excited, talking about Bitcoin going up to 28K, didn't happen. Didn't happen. This was such a weak rally. We couldn't even get to prior zones of support and resistance. We couldn't even. Like, it just, like, when you see things like this, you see a line right here. That's the previous support zone, and we can't even touch it because there's so many people selling beforehand. There's so many people selling beforehand that we can't even touch it, and it drops and it engulfs all these other candles. This is not good. This does not bode well for Bitcoin. Oh wow, we even have a gap down. That's kind of crazy. It's not that crazy, but wow, we gapped down a little bit. I don't know. Things do not bode well for Bitcoin. That's the main. And if what's not good for Bitcoin is not good for crypto. So be prepared, you guys. Be very prepared. I'm not saying sell everything. I did. I'm not holding crypto at all right now. I'm holding some crypto, just a little bit, for the airdrops, but I'm mainly holding stocks right now. I'm mainly holding stocks.